All right, well, President Biden covered a lot of ground in his State of the Union address, including pressing the issue of inflation, providing an encouraging tone for Americans. Let's take a listen.
We're better positioned than any country on earth right now, but we have more to do. But here at home, inflation is coming down.
The inflation picture is certainly a dominant topic for markets, but there are other worthy additional takeaways for investors to mull over as well. Here to break it all down is Yahoo Finance's Blikre. Hey, Jared.
Hey there, Rochelle. Now, President Biden, he touched on the still pernicious inflation facing the American people in his third State of the Union address, as well as a number of other topics, some issues such as the billionaire income tax required by law, legislative action that realistically has no chance of passing. Now, Biden spent some time on the debt ceiling and the implication for averting an unlikely but still possible crisis in the U.S. But guess what? The bond market saying something otherwise. Potentially, it is the age-old choreographed circus that rears its ugly head every few years. Now, we know it's nearly always a nail-biter. This is a debt ceiling that gets solved at the last minute. But the U.S. did get so precariously close to breaching it in 2011 that S&P Global Markets, they cut their rating on U.S. debt, leading to a bear market in stocks by many measures, as well as a bond market rout. Now, last night, Biden drew some boos from a Republican about Social Security, but benefits such as those remain in the third rail of politics with no realistic change of getting revised anytime soon. Now, I mentioned stock buybacks as well. Biden would like to quadruple the new tax on them. Also talked about a minimum income tax on billionaires, but these items have virtually no chance of passing in the current legislative environment. So let's take a look at some of the charts I have here, and we'll begin with stock buybacks. Now, this is probably something that's not going to get touched in the near future, but we do have a new tax that began recently. Biden wants to quadruple it. But the fact is, even in the face of that, this is stock buybacks announced through February 1st of each year, going back to 2005. By far, the current environment is the biggest. So we are set for $869 billion of stock buybacks this year, which would be a record if the pace continues. So that is a passive buying force that is a tailwind for the market. Very important to keep that in mind this year. U.S. inflation rate, 6.5%. Elevated historically, but significantly off the boil here. And when we talk about inflation, a few key components, the Federal Reserve looks at something very, very specific. They're looking at core non-housing inflation. That's a subcomponent of this. But my point is, goods inflation, Powell acknowledged yesterday, coming off the boil, probably well underway. It's that services inflation that he needs to get under control. And then the U.S. debt limit. This is something we've talked about quite a number of times, currently sitting at about $4 trillion. As we approach that, there's going to be increasing potentially volatility in the Treasury market if the extraordinary measures that Janet Yellen is using to preserve the solvency of the U.S., if she gets a little bit too close to that ceiling, then we could have some fallout. Now, I should also say the Treasury is depleting its reserves, its account at the Federal Reserve. So all of those funds in the Treasury account are being flooded into the economy. That is offsetting currently the Fed's quantitative tightening. A little bit wonky, but the status quo as we sit here is that we are not really tapping into those reserves the way you would think with quantitative tightening. All of this is going to change later in the year, but just a quick recap for you, Rochelle, of what went on last night.
It certainly was a busy one, so appreciate you breaking it down there for us, Jared.